What's going on, guys? Philip at Trade Genius. All right, time for an update since our last video. Currently, the price action has been decent on the hourly as far as taking small swing entries using our moneymaker indicator. And if you guys are interested in that, you can head over to Trade Like a Genius. We have a promo code SCHOOL if you want to just get that indicator, or you can look at one of our bundles on our back to school specials. The indicators in this bundle here, number 2. If you want to get in the room with us, bundle 1. But back to the charts, we're going to talk about this last move that we had. So we'll look at the monthly chart and the weekly chart. We'll also take a look at the fib multiplier, some interesting notes on the levels that we're playing with here. We'll take a look at our internals. Of course, we'll get an update on the crypto fear and greed chart, talk about how we're progressing against our Tether Cap. We'll talk about the CME Futures gap chart and which levels are still in play there. We'll also cover the yuan chart. That's a big reason why we bolted up in this last week. We're also going to discuss the futures expiration chart because I want to go over that price move. And last but not least, we have a new study. I call this the Bitcoin heat map, and I'll explain what this means. All right, guys, let's dive into this video.
Trade Genius.
All right, guys, monthly chart on Bitcoin. Since our last video, we do have now a monthly close on July. So basically, we have a down bar here inside the range of June's monthly bar. And for me, this month would be key to stay above this 10,800 area where we have our close and open of these monthly bars. So far the action is good. I would not be surprised if we stay within the range of last month's July's bar. Because honestly, with this type of move, a consolidation on top of these gains would actually be very healthy, and I think would be likely before we start going into a Q4 pre-halving move. So very healthy if we can stay in this area within this range and then build off of that as we move toward the 2020 halving. If you look at the weekly chart, now, again, if we look at the ranges, we have this large fib area here, which we've come up against, been rejected, and every time we try to push up in that, we get rejected, which isn't necessarily a bad thing. In fact, the longer we linger around in this area, the better. But this is the forces in play right now. As you can see on the moving averages on the weekly, we've pulled back to that faster moving average, and we've bounced off of that. So that's actually normal. We see that typically on these up moves. I would call this the second pullback. This was the first pullback in this move. This is the second pullback. And once you start getting into this second pullbacks and say a third test of this, that's where I would look for probably some chop. But I think largely this, most likely on this weekly moving average, will act as kind of a buoy point or pivot point where price will kind of meander around it for a few weeks. So again, that's not bad. I think that's just plays into more of the consolidation theme. Again, I look at that as a bullish thing because you've captured all of these gains and you're consolidating at higher levels, and basically that coils things up for another move. And again, this is more about where we are in the halving cycle. So very bullish as we get closer to the 2020 halving. On the daily, okay, we have just a huge mishmash of fib zones, and that's what all of this red stuff is here. That's just a bunch of fib zones that are bearish, and really those still hold these lower targets. We have one at 86.55, which is around a CME gap level, and then the lower one at 8,095. And really what we need to see are daily closes above at least like this lower one, which would start at around 11,900. We can get a daily close above that and above these prior highs, which currently this prior high is at 12,320, and that was off the yuan devaluation that really ignited this move. But if we can see a close above that, that would start eliminating this lower fib zone. Ultimately, a couple daily closes over the 12,600 level would eliminate this upper fib zone and kind of kill the likelihood of these targets lighting up. I think broader terms, look for this consolidation pattern. So basically we have this pennant pattern. It would not surprise me if we gyrate into this. So we roll over here and bounce off this lower level around 9,900 and then bounce higher. Of course, not in a straight line, but it would not surprise me if price did gyrate around there. We're still holding this long fib area, which also has a target of 15,383. So my bias is that we can bounce around in this channel. If we get a close out of this range here above this trend line, that'll change my mind, and then look for this fib range from this low to this high play out, and then that 15,383 area would be a likely destination. All right, so the Chinese yuan, okay, that's the orange line. This is the USD CNH pair. Okay, so if the yuan is devaluing, this is going to shoot up, and so this is going to be directionally biased for Bitcoin. So if this line's going up, Bitcoin's tendency is to go up. So that's what really ignited this move off of last Sunday. They did a big devaluation. This USD CNH pair shot up, and Bitcoin went right along with it on a big tear. So, essentially they're hedging the reduction in the value of the yuan into safe havens like Bitcoin, gold, commodities, metals, and the like. Since then, the last couple of days, they have actually walked back that devaluation. And so we'll keep an eye on this, but Bitcoin has, been more or less gyrating along with the yuan. So again, I would keep this up on your charts. It's the USD CNH pair. You can add that as a overlay onto your price charts. And so if you see any kind of deviations on that, like for example, here we pulled back, notice the yuan started going up and then Bitcoin follows up. So you can kind of look at that. If you start seeing these deviations on the yuan line, then you can start looking at a lagging move into Bitcoin to either catch up or catch down to it. All right, let's take a look at the fib multiplier. So on the fib multiplier, what's interesting is it kind of capped this rip move up, this yuan devaluation move up, and no one was really looking at this price level here around the fib 2 level here is at 12,257, and that's give or take a few dollars. That's where this move topped out at, and couldn't really get above it. I still am of the mind that we should expect to see price gyrations between the fib 1.6 and the fib 2 level. Historically, that's to be expected, but I would be surprised if we did break down below this fib 2 level for any length of time. You might get a little price action below it like we saw here in these last two dips, so but not really a close on the daily below that level to speak of, and immediately bounces off of that. So that, I think, will probably hold the lows for the most part at any kind of dip down in this market, again, as we kind of head toward the end of the year and get closer to that 2020 halving. And I think that this fib 3 level, currently around 18,386, would be probably the top of any upside move if we were to break out over these highs. All right, guys, looking at the market internals, again, off of Sunday, we ripped higher. And, basically kind of neutral as far as how people were being positioned. This is more reflective of the pro traders. We started to see them get long as this started coming up off of this bottom here. And then the longs really sustained their margin positions from the third. And really, again, when we start seeing this acts as fuel. This is the pro traders getting position, and that's your fuel for the move up. When these moves typically end, you'll see a large move down, which typically starts stopping out all those shorts, and then you'll see a flip short. On this graph, you'll see negative prints. That means that people are paying to get short, and then you can start selling the rips on these. So right now, a key level here is this 11,500 support resistance line. If that breaks down, you'll start seeing a long squeeze, and then we could possibly see a dip down to 11,000 or below. Keep in mind, we do have a gap, which we'll talk about here shortly, at around 10,880. So we're keeping an eye on this level because that could create a long squeeze and we get a swift move down. Typically, when we get a sustained move like this where the pros are positioned long, they typically will end with a fairly violent move down, getting all these guys stopped out, and then you'll see them flip short. As far as the long and short exposure, shorts are continuing to, and this is on the Bitfinex exchange. They're growing back in amount of size that are short positioned or hedged. Have not seen a drop off in the shorts exposure like we saw in these last two drops, but we'll keep an eye on that. If you do see that again, which we might not for a while, but if we do, then we'd have a heads up that we could see another move down. Typically, they precede a fairly large move down. Looking at the crypto fear and greed, I think we have a great high-low watermark now in the bull market. So reading, our high point reading was a 95, and then we had a couple low readings of 16. So when we get to those levels, that's a big time heads up that we need to start looking for bottoms and tops of current moves. We did get a 16 down here on July 15th. And then we had a lower reading of 19 on the 17th. Again, these 2 days were lows. And then the last low we got was July 28th. And we've been straight up since then. So now we'll key in on those levels going forward for extremes and good likelihood of a sustained long bounce for 10, 20% moves or more. All right, guys, Tether Cap. Last time we left off the chart, we were down here. The Tether Cap was fairly high. and we talked about, a move up to the cap, and we're seeing that now. Running into some resistance here, as we talked about on the chart, but the tether cap would imply that we still have room to run to the upside. Now, if you notice, the tether cap is leveling off, and we really haven't seen that level off since back in April when we came out of the 4,000 resistance and really never looked back. Now, the tether moves up are delayed by several weeks, so we're catching up to meet this last leg up. Now, this consolidation or this sideways movement, that just means that there's really not a net inflow of capital into the crypto markets to go to work. And again, that plays into forward looking where we start going into a consolidation phase with Bitcoin. And really, that's just resting up for more upside as we get into Q4, closer to that 2020 halving. All right, guys, this is the futures gap. We have a small gap here at about 10,870. Would not be surprised if we got a dip through there. Again, we still have this lower gap, technically at 85.15. Again, this is on the daily chart, guys. And really, the stuff that shows up on the daily is really the stuff to be concerned about, big picture. Again, these don't have to fill. It's more of a trader mentality where if you start getting to within proximity of them, most likely what will happen is people will target that level and price eventually comes down and closes up that gap. So the closer you are to them, it sucks in the price action. So if we get a dip down at this gap here at 10,870, I think that's a decent risk reward area to go long. All right, guys, this is the Bitcoin expiration chart. Red line is our CME Futures expiration last Friday of every month. And again, this is more of a hindsight thing, but what I wanted to show you guys is that watch for these moves. If we go up into them or down into these expirations, look for a counter move, or they act as a pivot. So we go up, they pivot down, or likewise, if we go down, they pivot up. So I wanted to just go over this because we talk about this toward the end of each month, and it helps give you or frame you a bias for potentially what can happen or what to keep heads up on potential swing moves after those expirations. All right, guys, this is the Bitcoin heat map. Basically measures the futures pricing versus current pricing and kind of reads it as either a bullish or bearish sentiment, and then color changes the background. So if it's blue, you want to go long on any dips, and if it's red, you want to short or sell on any pops. So for example, and what I do is I wait for 3 bars to confirm the color change. So if it's just one bar of a color change, that doesn't necessarily mean that sentiment has changed, just might be a heads up. But if you notice that this flipped end of July and then it confirmed July 31st, again, this is a 4-hour chart. So basically at any time there was a pullback, it would be okay to buy that dip. So if you're eyeballing on maybe a lower time frame chart to get long, it's okay to get in and take those buy signals. So it's kind of a larger time frame indication of what the overall sentiment is. So if it goes red, for example, here it went red, then you basically would fade any kind of strength. So you can use either moving average, you can use the faster moving average. Again, we recommend having a faster moving average and a slower moving average in addition to the 200 simple moving average. But any kind of pop towards those would be okay to short or sell against, and they would should result in a move lower, if not making lower lows, and vice versa. So we've been writing this up. It's everything, so far it's been saying okay to buy the dips, but now we're starting to falter here. One thing that you want to keep in mind is, again, watching the moving averages, and we're starting to lose this faster moving average, which means that we probably see a test of this lower moving average. But I would also temper that with, we may see a color change on the heat map. Again, that would take 3 bars. So you could see a drop down into this level and then a bounce, but you have to be mindful that you could, be on your toes. But that's something we're going to cover more on this heat map, kind of give an indication of what the overall markets are doing. This would be more in sync with like what the professional or institutional type traders are doing, because they use hedging. So if they're buying up the futures, you can translate that into bullish or bearish sentiment. But I think it does a pretty decent job of indicating that change in direction or the change in winds as far as the trends go on a 4-hour chart. So we've had a nice run up. Potentially we could be losing some steam. We'll see if this rolls over here and changes colors on the heat map. All right, guys, well, that's going to wrap it up for this video. I think, summary, I think we've had a nice rip. This is coming off of the yuan devaluation. To me, that was the big catalyst here on this rip up. But I also think we're playing into a larger consolidation move, which is perfectly healthy if we maintain these levels. In fact, if you're looking for higher moves on Bitcoin, this is what you want to see, some consolidation on these higher levels, and then we start making a move higher. Again, the proximity to halving is really going to drive all this. So it's just about understanding where we are in the local moves, the local tops, local bottoms, swinging those, or pinpointing optimal entries for adding to your long-term HODL stack. All right, guys, well, that's it. Thanks for watching. Please hit like and subscribe. I will see you on the next video. Take care.
Trade Genius.